Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here, aka Nick, and it is Tuesday, April 8th. Wow, I wish it was April 28th is what today is. And it is still 8:32 though. Got that part right. And the NASDAQ taking a nice tumble. May have had to do a little bit with the Bank of Japan data, although I don't think so. It might just be a pullback and it might be a trading opportunity. So we're going to take a look at that today. And let's go ahead and take a look what happened with the USD JPY, or with the JPY, I should say, with Japanese rate. They held the rates steady. Okay, now their core CPI showed a little bit of disinflation, meaning that should the Bank of Japan want to, deal with that disinflation, they might not want to hike rates again. But at this point, I would imagine they're going to either keep rates stable the next time they make their decision or hike them. Morning, Mick. How are you doing, bud? Good to have you on here. All right. So that said, the data came out, and it might just be that a lot of money was kind of waiting for that data to come out before it made any trading decisions. And if you watched my Monday my Monday weekly forecast yesterday, you would have seen that I was looking for a bullish entry on the NASDAQ. And we also talked about kind of the centerpiece of that weekly report was the Bank of Japan rate decision. Now that their rate decision is out, and it wasn't anything drastic, right? They just kind of kept rates where they were instead of hiking them, which was a distinct possibility. We are able to kind of move forward, at least with that bit of information. But the rest of the week does have a lot of, interest rate decisions coming its way this week, like all of them pretty much. So we got to watch out for that. Let me switch the screen here. Miko asking about time the markets were allowed to fall a bit, for how long and how much is a question. Yeah, exactly. So at the moment, the NASDAQ is really on a tear, and I think it's going to continue up. Although, as you can see here, this isn't the prediction from last night per se. Last night's prediction was like kind of either it's going to go sideways or up for the rest of the week. I'll flash that on the screen here really quick. Let me flip the screen over. Really didn't do exactly what I thought. What I said, well, I mean, it kind of did. It pulled back to an area I said it might pull back to. But remember, I don't enter trades until my algos say it's okay. And it's a nice entry possibly coming up right now. Now, the FOMC is on Wednesday. So if I were to take a trade that were to last, for the rest of the week, I probably would wait until Wednesday. In the meantime, this is approaching some nice entries, but that's a mean move down. And I certainly didn't want to make any trades until the Japanese data is out. And now that it's out, let's go ahead and move over to the chart that I like to use for these shows and see what we can do. Let me take a brief look at the data here. It does look like this wants to take a break, but I don't think it's going to be a break for very long. So what I would do in this case is I would take a look at the areas where I might buy this pullback. And one that makes a lot of sense is in this area of consolidation. Now, another one that makes a lot of sense is the prior all-time high. I don't know that we're in that kind of time period where we're going to be wanting to do that yet, though. I don't know that it's going to make it all the way down to this 26,419 level, which is all the way down here, the prior all-time high from 29 October of 2025. It may not make it all the way down there, guys. I don't think it will. I could be wrong, and I'm not going to make a decision until the algos say that I can. But if I were to go ahead and remove some of these drawings, what we'll take a look at is using a tool that we can talk about today. It's called a fixed range volume profile, right? So first we're going to do a typical thing that traders do, and it's a great way to take a look at some basic areas where price might go to. Firstly, you have some structure right here. A little older though, it's outside structure. It's not part of this move up. It's an older look where price kind of built some liquidity, and that liquidity is all right here. So this is a good area to just kind of consider as far as, okay, maybe I'll, take a look at this when it gets there, but I wouldn't look at it too hard. Just something to pay attention to. We have our prior all-time high. I don't know that price is going to make it to any of those places. And we got a couple of other areas lined up. we're going to take a Fibonacci tool and we're going to impose it on this impulse, the impulse going back to the bottom here at 22,944 all the way to the top here at 27,535. And then we're going to map our Fibonacci tool onto that impulse. I usually don't draw the impulse. That's for you all to see, okay? So we now have some Fibonacci areas, right? So I'm going to, I know it's getting a little bit messy on the screen here. In fact, what I'll do is I will, well, I'll just work with it. So there's a 382 level right here. There's a 618 level right there. I'm not going to line those out just now. I'm going to get rid of some of these lines right now, just to clean it up a little bit. And I'm going to use that fixed range tool we talked about to see where a lot of the volume nodes are, okay? And we'll talk about how that's useful in determining price. Now, there's a lot of volume right here, and that's basically the box I had drawn before. So there's a good chance price is going to come back to this level right here because price is attracted to those volume nodes, right? And it is repelled from the areas that don't have volume nodes. So really a pretty fair place to look for a long entry would be in this box. So what I'm going to do is go to a lower time frame so that I can try to strategize that. Because unless we're seeing, you know, some pretty big news come out today, maybe there's news I don't know about. This is a pretty stiff move down, but this was a really, really hard move up in the NASDAQ. Like, I mean, that it did nothing but go up for like a few weeks, right? So let's see here. Going back, like, so all of April, it just went up. That's it. We got Miko in the comments here, up 390 on the NASDAQ short. Okay, so you're in and you're winning your short. That's great. Entry long, you think 26906 to 26850. Yeah, that's kind of where I'm looking, more or less. You know, my range, your range is within my range, right? So, and I know you and I use kind of different metrics on that. But if I were to target an entry for a long, it would be in this area based on the data that I've got. So basically anywhere from like here, I probably would have a stop loss below, you know, maybe this area or even this area. And then, you know, long up to this first target that we talked about on yesterday's show, something like this might be the way. You know, depends on what's going on with the algos at the time of, you know, like if price comes to this area right here and my algos don't give me the entry, then I probably won't enter, right? It might actually go a little bit deeper. But if the algos give the okay, then I will be in, and I probably won't be in right at that level. I like to wait for the algos to say it's okay, which means it tends to go up, and sure, it might eat into profit a little bit, but it's better for my numbers overall to do so. Right. So that said, we might be looking at an area like that. And that's right at about 27,000. So it might be like a nice trade for those who are holding on. Now, here's the trick of it, though. And this is what makes this, you know, a little risky is that, what did I just delete? Okay. Let's got a lot of drawings on the screen here. Let's get rid of this guy. Nope. One moment here, guys and gals. It keeps wanting to get rid of my Fibonacci tool. Okay, let's lock this tool and get rid of that guy. Oh boy. All right, there we are. Now we do have to mark out the FOMC. Right, the FOMC is going to affect this. Now we don't know how, but we have to at least put a line in, and that's going to be Wednesday. That's tomorrow at about this time, right? So now this could be like, say I enter way back here if the algo say that's okay. And if that's the case and I'm in this trade, even if it goes nicely into profit, let's just say it just kind of takes off like right here and I'm in profit, under any circumstance, as Wednesday at 2 EST pulls near, I will be putting my stop to entry. That's how that trade will be managed, right? And I might even enter deeper and all those things. Like say the algos say I can't get in until maybe price is all the way down here. Well, that's nice because I get a deeper entry, right? So those are all things that are in flux. The stop loss, I'll calculate at the time of entry, but it'll probably be down in this area. That's a nice 4-to-1 trade. So that's a good look on the NASDAQ. And that's the plan for the NASDAQ. That's how I would trade it were I to do so. Okay, so let's take a look. Let me see. I think the best thing to look at might be, in this case, USD JPY. And it's rejected here. So this was something I talked about in last night's coverage. Let me go ahead and flip to that chart. USD JPY. Okay, so I had it kind of going up and to the right, but not as quickly as it did. I thought it would just kind of grind sideways and then go up, but it did make its way up to this recent high and start to reject. So it looks as if it's forming a range at this time. And remember, it's FOMC, so like anything can happen, but it looks like it might be a range play until it's not. So again, while we're in this area here of we could take this away, actually, remove that. So you got FOMC, but up until FOMC, if price were to head up and grab this top right here, it might be a nice short. If it went to the bottom, it might be a nice long. But I will actually play that out on this other chart here. And we'll delete our prior predictions here. I don't know if that's I don't think that's a prediction. I think that's me just drawing over the chart. As much as I would like to say I predicted that, I don't think I did, if we're being real. But I would look at this as the range. Okay, that's how I would treat this. And it's because of the number of rejections. You got 1, 2, 3. You got 1, 2 very clearly here on the bottom at like the exact same level. And then you have 2 strong rejections up at the top. So if price made its way, let me see if I've got, and it could. This is just a 3-hour. I'm just looking at the stack here to see what might happen and how I would treat it. The time to get a short on this is past. I don't know that I would have even caught this short because it didn't make it to the top of the range, right? So I think, one could have a lower top to the range, but the safe play would be either price kind of grinds up a little bit and you get that entry right there. That's one way to go. Nice short here. Or it would be the other way, where if price actually grinds down to the bottom of the range, as it may well do, and grab the long right there. Something like this. Stop safely below those lows. I think that would be the play either way. I'd wait for that range to be touched, though, in this environment. And then, of course, remember Wednesday at 2 EST, we've got our FOMC. So whatever trade I'm in, that trade would be protected at that time. Okay, that's how that would go. So those are a couple of trades here. We got the NASDAQ plan. Now we have the USD JPY plan. And we're going to move on to the private live lab. Thank you all for watching. We do this, what is it? Today's Tuesday. So Tuesday, Wednesday, Thursday, 8:30 a.m. we do this live lab. And if there is a trade to take during that time, I will take it. And otherwise, I just map out what my plan is. And then for another 50 minutes or as long as people have questions, we continue this over in the private live lab. So the show really doesn't end for our clients. It goes for basically the rest of the hour, unless they don't have questions and unless I don't have things to show them. So please come join us. There's a link in the description that will give you a free algorithm. If you want to build an agentic AI trading bot, then the algorithm is the heart and soul. It's the engine for trading it, right? And they're not that hard to build. Everybody gets discouraged when they hear about algorithms. They think they need to have all these skills. No, you don't. It's not that hard, especially with AI. You can build algos. It can take a while to properly test them, but basically we are teaching people how to do that, and we are going to be teaching people how to agentize them, so how to create the bots. In fact, the video in the description shows you the basic way to do that, of how to create, let's just call it a prototypical, trading agent, right? Just plug in your algo into your exchange, how to create the algo, how to turn it into code. It's all very simple to do. Now, to do it right and to be profitable is another story. If you just took this algo and plugged it into your exchange and told it to trade, I can't guarantee it's going to be profitable. In fact, probably not. You need to optimize it for what you're trading. You need to test it. We show you how to do all that stuff. So I'll tell you what, it's the way to go. We'd love to have you over at algofactory.tech. Either way, like, subscribe, and check that out. Check the video out. It's free. Free algo, free education. Otherwise, hopefully we see you over at algofactory.tech, and we'll be back tomorrow, 8:30 a.m. EST sharp. Don't forget.
Join us or die.
Just kidding. You're not going to